And it's great to have you join us for another edition of our weekend capital business program, Capital Market Live on Channels Television. I'm Ladi Williams. Let's take a look at how your money performed this week. But let's start with global equities market. We see major equities market around the globe ended the week mixed as investors assess the economic outlook and potential for further monetary policy tightening from the U.S. Federal Reserve. On Wall Street, the Dow Jones Industrial Average was up 0.50%. The S&P 500, that gained 0.22%, while the Nasdaq Composite slid 0.61%. In the Eurozone, the UK FTSE 100 dropped 0.36%. Germany's DAX dipped by 1.39%, while France's CAC index that closed the day with a 0.82% decline. Meanwhile, it's a slightly different picture for markets across Asia Pacific. In Japan, the Nikkei 225 ended Friday early in the day up by 0.07%, while Hong Kong's Hang Seng Index that dipped more than 2%, while the Shanghai Composite that was down about 0.3% on Friday. And for U.S. markets analysis, now we have Ogenerukawe Ojugo join us via Zoom. Equity analyst. Great to have you on the show.
Great to be here. Thank you so much for having me.
So U.S. markets closed in the green on Friday, but it's a weekly loss. Is this a sign of what's to come? Because we know January was good for most risk assets.
Yes, it's a sign that volatility is going to continue for U.S. markets, and that's something that has been happening since 2022. So the general sign here is that it's going to continue to be volatile going forward. And there are going to be days where there are ups and downs. And going forward, we can just continue to expect volatility.
And there's that debate about the U.S. Fed engineering a soft or hard landing for the U.S. economy. And there's a new scenario added, and that's no landing at all. How's this going to impact risk assets going forward in 2023?
Yeah, great question. So just to explain a bit what the landing scenarios are about, the landing basically just takes a cue from aviation, like when a plane lands. So in this instance, inflation is the plane that's been soaring for the whole of 2022. And going into 2023, the Federal Reserve has been trying to bring inflation down, and that's the term landing. So a soft landing will be that inflation comes down and the economy continues smoothly, and then the plane coasts down the runway. A hard landing will be the plane lands, inflation comes down, but the economy enters a recession, which is generally bad for assets and for people living in an economy. And then this no landing scenario is a new one where we've all been assuming that inflation is going to come down. But the no landing scenario is that inflation doesn't come down. It stays higher than the Federal Reserve's target of 2%, and it continues to coast. Now, what does that mean for risky assets? It just means that there's more uncertainty. And if there's one thing that risky assets hate, it's uncertainty. So that means that assets like stocks, like some other credit assets will also see volatility, and it's likely that they will go to the downside rather than the upside. So it means that risky assets have more downside risk than upside opportunity.
But what are you expecting for U.S. Markets next week? Any market-moving data coming up?
Definitely. So next week, we're going to be expecting the January inflation number for the U.S. And this is going to be something that the market is going to be watching like a hawk, because this week we had some Federal Reserve members, like the chair of the New York Fed, coming out to say that they think that interest rates need to go higher for longer. And the Federal Reserve chair himself, Jerome Powell, came out and said that disinflation is already in process. Basically, inflation is coming down and their interest rate hike situation is working as expected. So this is a mixed feedback that we're getting from the Federal Reserve. But ultimately, what they have told us is that we need to watch inflation going forward. So on Tuesday, we're expecting the US inflation numbers for January. And this is something that the market is going to watch very closely. If this number comes down, and if core inflation also comes down, it indicates that interest rates won't have to go as high as 5 or 5.5%. But if the number doesn't come down, or if the number stays the same as last month's 5.5%, then that's going to be a problem. And we're going to see a sell-off happen in stock markets.
Yes, we must definitely expect some volatility going to next week for global equities markets. But thank you so much, Ogenerukwe Ojugo, equity analyst. Thank you so much for your perspective on the show today. Thank you.
Thank you.
All right, so we're talking U.S. markets there, but let's bring it back home now. Activities at the unlisted securities market ended the second week of February in the red as the NASD OTC Exchange Security Index recorded a 1.2% advance. At the same time, the market capitalization dropped by more than 15 billion naira to close the week at 927.21 billion naira. The total value of securities traded during the week decreased by 67.94%. Total volume of securities traded on the exchange decreased by 79.32%, while deals dropped by 15.15% this week. Meanwhile, Capital Banco was the lone gainer for the week. NASDs led to other decliners down by more than 9%, while the most traded security of the week, Capital Banco, was also the top traded security for the exchange this week. And at the local equities market, investor sentiment ended the second trading week of February with a moderate comeback as the benchmark index rose 0.21% after a mixed trading session for the week. At the same time, the market's capitalization increased by 62.59 billion naira, recouping some of the losses it recorded within the week. Let's bring in Mr. Abdurrashid Momo now, traders, TRW stockbrokers. Join us via Zoom. Great to have you.
Hey, Leland, how are you doing?
I'm fine, thank you.
Can you hear me?
Yes, I can hear
Okay.
you. I can hear you very well. So let's take a look at the local bourse performance for the week. How did you see investor sentiment?
Well, let me start. I'll list out people the way I analyze the market. I use algos using technical analysis. Basically, I said the market was going to reach about 54 to about 54,290. We are within that range. We are actually above that range. If you see my background, you can see the trend there on the NSE and I've drawn my lines. So basically, we are entering the month of, we're actually in February, and the first quarter, or let's say the first half of the year, mostly always bullish. Now that we are within that level, it's more of cautious trading. If you see what's been happening in the market lately, you see that we are not seeing more of the big players actually moving. What we are just seeing basically are just volumes traded in those stocks. So you see that mostly no price movements. The stocks actually moving up this lately are the low cap stocks like Triple G gain about 30% this week. International Energy gain 25%, Cornell 20%. MRS and the rest. So you don't really see the big players actually in the top line. All you see are basically volumes. So volumes is what's happening now. Investors are actually watching because, let's say, in terms of financials, in anticipation of what we have seen so far. And I always tell people one thing: the market is a discounting mechanism. Everything has actually been priced. From November till date, market have moved from about 43,000 points to about 54,300. So you can see anything that comes out now will not be a surprise. The market has actually reacted to what is on ground. So for now, all we just wait is for the financials to come out and see the next level the market is going to take.
Let's look at the all-share index now. Are there any resistance zones, we should be looking at and support levels?
Yeah, actually, I created about 54,290. That was my max. But it's going about 54, I think about 54,300 and 54,327 as at Friday. That's where we are now. So give or take, worst case scenario, I'm looking at about 55, close to 55 trend. As I said, the last support, this last resistance we had in the market, the highest peak we had in the market last year was the period of, I think, April or so, when the market hit about 54,290. And that 54,290 is actually the what I've held on to. But lately, the market has broken that level. But even the 54,327 is not an actual breakout. So I'll still stick to my 54,290 for now. That's why we are not actually seeing most of those spikes. No, the many big players are not actually moving the market. What we're just seeing is more of volumes traded in those big names. You can see the names coming up lately: the GTB, the Zenith, the Geregos, the I think Airtel and the rest, Seplat, But we are not seeing much activity now for now. We are not seeing more price appreciation for now. So I think this level in which we are, it's in anticipation of what is going to come next, what's going to be next. Whether they're going to be a breakout from the level we're seeing or the market might just reverse back. So for now, I'll advise people is more of cautious trading.
Cautious trading. All right, looking at some stocks performance last week, did you notice any, stocks with unusual volume that we should be looking at for next week?
Yeah, despite the fact that they have downgraded the banking sector, Moody has downgraded the banking sector, I still look at stock like GT. When you trade using TA, apart from looking at open, high, low, close, you look at volume. Volume is key. And if you look at volume, especially in the banking sector, we've seen a lot of volumes traded on the shares of GTB. So I think there might be something happening in GTB. I don't know. But my charts actually tell me that volumes have been traded in that stock for the past 3 months. We've been seeing volumes. And a stock like GTB has actually broken some key resistance levels from about 2018 till date. Another one I said last time was Fidelity. I was thinking that Fidelity was going to be about 5 naira plus, and it has actually hit that trend. And I still see there are still moves to the upside, because what the key things you should look at is support and resistance levels. So are these stocks above resistance? Yes, for Fidelity is above. Another one coming up, it's I think FCMB. FCMB still seems to be following suit. It's been trending up, but I think there was a correction from about 5 naira to about 460. But there's still room for upside. So I think for now, those are the two. Then I think another one might be NACO shares. We've been seeing volume lately on that.
All right, I guess I'll be looking out for those stocks next week to see how they perform. But we'll continue the conversation right after this break. We'll be looking at some Q4 unaudited earnings and full-year earnings that we've gotten for stocks listed on the market, and also talking about Ardova, what's happening with those minority shareholders. That's our next conversation after the break. Do stay with us. This is Capital Market. Welcome back. Still watching Capital Market live on Channels Television. Let's look at some stories and make the headlines during the week, starting with the Ardova delisting from the NGX. Listed energy firm Ardova PLC announced its plans to delist from the Nigerian Exchange Limited. This comes after its core investor, Ignite Investment and Commodities Limited, approached the board of directors of the company with an intention to acquire the shares held by other shareholders of the company at an offer price of 17 naira 38 kobo per share. However, Ardova says the proposed transaction is subject to the review clearance of the Securities and Exchange Commission, as well as approval of the shareholders of the company. All right, let's bring back Mr. Abdulrasheed Momo, stockbroker, TRW stockbrokers. Thank you so much for staying on.
Thank you, Vladi.
So this Ardova delisting, how are you seeing it, and how are investors, reacting to this? I know minority investors are not so happy with the price they're getting.
Yeah, if you look at the history of Ardova, I think when Mr. Femi Otodela took over then, I knew the price moved from about 18 naira to about 300 naira. They paid dividends that period, and later the stock dropped and he sold out majority of those shares. I think then it's about 56 naira or so, and they came and made an announcement of a buyout of about 500,000 units for the whole market, then about 56 or so. And that was all. And since then, the share price has been dropping. I think for the past 2 or 3 years, the earnings of Ardova have been dropping, and they have not paid dividend till date, which is not good for investors. At this current price, it's not fair to the investors, because if they have been paying dividends, it would have been a different ball game entirely. I know some investors are not happy on what's happening, and the advice mainly, there are some people that actually buy shares and keep. I always tell people one thing: look for shares that will give you returns on investment. Since the sale of Ardova, if you've seen that over the first 1-2 years they've not paid you anything, I don't know why you would have been in that stock till date. You understand? Because if you invested your money to other companies that have gotten returns on investment. But by the way, for investors that actually buy and keep for the long term, I had to consult before this interview what is actually the fair price of Ardova, and told about between 20 to 25 naira. So actually, this current price is not a fair deal to the minority shareholders, based on the fact that for the past 3 years they've not paid anything and earnings have been dropping. And even if they still continue, I don't know when the shareholders will actually be paid. So I think it's a huge loss for the investors. Really, it's a huge loss.
And how do you see this whole scenario? How do you see it ending?
I wouldn't know yet, but I know it's not by force. As I said, it's not by force to actually let it go, because most stocks that have been delisted on the stock exchange have actually ended up in the Nasdaq market. Stocks like 11PLC, that's Mobile, I think one of them. I think Access too. Access Corp, but Access it's listed on Nasdaq. I think they may end up being in Nasdaq. So if they want to hold on in the long term and see if anything comes out from Ardova, it's not by force they have to sell those shares. They have to hold on till I know it's going to end up being quoted on the Nasdaq platform. So for me, for them, it's a wait. But for me, I always tell people, no sentiment in stocks. Any stock that does not give you good returns on investment, you don't have it in your portfolio.
Well, I guess investors are going to definitely learn from that one now. But majority of the stocks listed on the local bourse, they've released their unaudited performance for Q4 and a full year. How are investors reacting to these results? Have they met expectations at all?
Yeah, but if you check out the market, I mean, from the chart, you can see that the market has been bullish all the while. Even when all the financials came in, the market has been going up. So the next level is what next? As I've told you, the market is within a key resistance level now. The next set of things that comes out will be what will trigger. The market is actually, in my word, consolidating now. We're going to see, like for new investors coming in, you got to be cautious. And again, what you need to know is that at this level, I always tell people there are 2 types of players. We have the traders, and we have the investors. The traders have made money from November till date. You understand, from about 40-something thousand points, about 50-something, which we are now. So even if any financials come out, they are going to sell. But again, for the people that actually buy for dividend payout, why the market is still intact, because we know this is the dividend era where companies are going to announce their year end, and we know we are going to pay dividends. So I think that's what investors are actually waiting for. But for traders, I mean, from November till date, they've made more than enough money from the trend you are seeing in the background. They've made more than enough, funds. So all they are waiting for is how those financials come out in terms of dividend. No matter how the dividends they pay now. Example, I think stocks like Zenith, GTB, if you check out even Fidelity, they've moved, from about 19 naira to about 25 naira. That's about 6 naira. Worst case scenario, they'll pay close to about 2 naira plus. So that 2 naira plus for traders, they've actually made that spread already. So you might see a situation where these results will come out and you see some people selling, but you still see buyers. So it depends on who actually holds the market. It's going to be the buyers or the sellers at the end of the day. And that is why lately, what I've told you, that we are not seeing movements in those stocks, but we are seeing volumes being traded. So as it is now, we're within resistant areas and we are waiting for the next information that will actually trigger the market, whether to the upside or the downside.
And we have the inflation data coming out next week. What are you expecting? How's that going to trigger the market?
As I always said, the market is a discounting factor. Everything has been priced in. Even if it's good or bad news, market actually reacts even before anything happens. Why I'm saying this is that if you look at the overall general market, right? The market, the NSESI, I've looked at it. The market actually has a 2-year cycle for everything. When I mean a 2-year cycle, you look at extreme ups and downs in the market. And what I'll show is that for every 2 years, from let's say 2006, the market moves every 2 years up. From 2006, it moved about from 25,000 or 20,000 points to about 66,000 points. That was the highest we ever got to in the history of this market. And from that time, it moved to about 20,000 points. From 2008 to 2010, there was an uptrend and there was a downtrend. From 2012 to 2014, moved from 20,000 points to about 43,000 points. And from 2024 to 2026, there was a downtrend from 42,000 points to about 25,000 points. And 2016 to 2018, there was an uptrend to about 43,000 points again. And from 2018 to 2020, there was a downtrend to 20,000 points. Now the second cycle, the last cycle is 2020 to 2022. So market has a lifestyle cycle of every 2 years, there's an extreme uptrend and downtrend. So based on what you're asking me, everything has been pricing. So there might be a situation where we might see a market actually coming down in the long term. As I showed you from that background, I'm showing you the trend. If that market does not break that trend, then we might see a downslide coming up. But again, we're in a season of election. So what happens during election period? And what I did was that I wrote down, I actually went to my charts and I checked out April. I've seen that in the period of April, the market is actually bullish in the period of April. So I see this trend, even if the statistics come out on inflation, I still see this trend holding up to the period of about April before I might not see any change. So that's what I'm trying to say.
All
so
right,
no matter what comes out now, the market is able to hold on to about April.
Yeah, we'll definitely see how the markets actually reacts to the elections. It's election month and it's heating up, at this time. I want to thank you so much, Mr. Abdulrasheed Momo, stockbroker, TRW stockbroker. It was great having your perspective today, and enjoy the rest of your weekend. Thank you.
Thank you very much, Larry. Cheers. Have a nice day.
Thank you. So here are some key expectations for Nigeria's capital market and financial market in the coming week. At the bonds market, the outcome of the FGN bond auction that's holding Monday, February 13th, that's expected to shape yields direction at the T-bills market. Yields are expected to increase from a current level amid tight system liquidity and the money market overnight rates to trend higher, and pressure from FGN bonds and the ERMO and Forex auction outflows. The equities market, cautious trading is anticipated as election week draws nearer and more company earnings are expected. All right, thank you so much for watching. That's how your money performed this week. We'll catch you again next Saturday. I'm Ladi Williams. Bye for now.